In this video, I'm going to be showing you one of, if not the most important thing in trading, and that is understanding price action. Price action is the basis of our technical analysis, and it allows us to predict the SPY D1, the SPY M5, the stock D1, and the stock M5. And unlike all of these technical indicators, which are by definition lagging or late, price tells you what is happening now. So once you understand price action, you'll be able to throw all of those lagging indicators out the window if you wanted to. So now I'm going to be telling you what the goals of the video are. The goals are teaching you what price action is, how you can read individual candles, how groups of candles make patterns, and how we can apply all of this to make money. So without further ado, take some notes and let's get into it. To first understand the meaning of price action, I'm going to give you an analogy. First, you can think of the chart as a short story of buyers and sellers battling it out. And each candle represents a sentence and groups of candles make paragraphs. And to be able to read the story, you need to understand the meaning of each sentence, then understand the meaning of each paragraph. And once you read the story, you can apply what you learned and predict future price movement. And you're not going to be lost in your trading, thinking you're just looking at a bunch of random rectangles, right? So let's talk about the individual candle. Each candle has a meaning to it. It shows a supply and demand battle and which side had control. And each candle will show you who won, who lost, and how decisively. And the length of the candle's body tells you key information. When you see a candle with a long body, it shows you that one side dominated. And ones with small bodies or dojis shows equilibrium. The length of the candle's wick also tells you something. When you see something like this where the candle has a long upper wick, it means that buyers failed to drive the price higher because sellers stepped in. And for the opposite, we have a candle with a long lower wick where buyers stepped in after sellers drove price lower. Long candles with large bodies and no wicks show pure dominance, where one side had pure control from start to finish without any real pushback. So to help you understand the individual candle, I'm going to go ahead and explain this chart. So here we have the 5-minute chart of a stock ALAB with a long overnight gap up. And for the first candle, buyers were able to drive up price, but later in its formation, it encountered resistance, which resulted in a long wick on top. And for the next candle, buyers tried to drive up price, but the same thing happened and sellers were able to smack it down, which resulted in another long wick. And it's the same thing for the third one. Buyers stepped in and sellers smacked it down. So far we know that buyers are active, but sellers are also certainly active. And for the next candle, sellers are able to get through VWAP and test the halfway point of the first opening candle. And for the next 3 candles, buyers are retesting VWAP, but every time sellers were able to smack it down and start making progress through the overnight gap. Then we have another doji where buyers tried to take out the previous red candle, but again, sellers were able to smack it down and make it finish as a doji. Then on heavy volume, the buyers decide to test VWAP again. They make it to VWAP and are able to poke through it, but again, sellers smack it down back to VWAP. And then we have one decisive candle, a bearish engulfing candle with a long body that takes out the previous green candles. And this candle right here is decisive. It tells you that sellers are very interested in selling the stock, and any green candles are likely to be quickly taken out. And the next green candle, followed by the compression, just confirms it. This candle right here is not able to take out the halfway point of this red candle right here. And if buyers were strong, they will be able to engulf this red candle and start driving price back up to VWAP. But that does not happen and the price just compresses for the next 6 candles. So that's kind of how you should be thinking about price action in real time. Just from looking at the individual candles, you know that sellers are in control. And eventually the buyers just completely throw in the towel and the stock starts making legs lower. So that's pretty much it. Now that you understand individual candles, let's talk about how groups of candles make patterns and why that's important. When you group candles together, their pattern reveals the strength and momentum of a trend. And there are a few patterns that you should know. For the first pattern, we have stacked candles on heavy volume. Stacked candles with little overlap and heavy volume are very powerful, and when you see this pattern, you can expect follow through. You'll notice that all the candles are all the same color, the bodies are long, and the overlap isn't able to breach the halfway point of the previous candle. And that right there is important, because what it's telling you is that the other side just isn't strong enough to push price back. And whoever is in control, whether it's buyers or sellers, they are stepping in early and they're just hammering the bid or the ask. And the cleaner this looks, the stronger the move usually is. So when you see this pattern, you need to respect what it's doing. The market is showing you who's in control. So you should either wait for a small pause or maybe a weak pullback and then join in on the trend. And until something actually changes, like you get a deep pullback or start seeing some overlap, there's no reason to assume the move is over. Now, I don't want you to misidentify what the stacked candles pattern is. This right here isn't stacked candles, and this isn't either. Stacked candles is a very specific pattern. where you see candles of one color on heavy volume and little retracement. So that is the stacked candles pattern. For the next pattern, we have mixed overlapping candles. When you see tiny bodied mixed candles like this, it's a sign of weak trend strength with little conviction. This pattern can still drift price in one direction, but it's unreliable and it can be easily reversed. And you'll often see this kind of price action after a strong move has happened, and it shows you that momentum has been lost. And you might want to take gains on your positions when you see this kind of movement. In this example, you will see that the market has been trending higher, but these red candles start to appear and they start to overlap with the greens, which shows you that buyers are losing control here. So basically, mixed overlapping candles are a sign that the overall trend is weak. And if you see them after a big move, it tells you that a reversal may happen. For the next pattern, we have small candles of one color. This pattern here means that the overall trend can continue, but you need to be cautious, because if the sellers were truly at bay, then the candles would be taller. So when you see this, you know that they're close. And when you see this, there's likely also low volume accompanying the move, which means overall the buyers don't have much conviction. And moves that happen on these small candles usually end in a sideways range or even a reversal. And for the last pattern I'm going to show you in this video, we have tails under body. And this is what a tails under body pattern looks like. It's where you start to see big wicks under or over the candles. And if you see tails under body after a big drop, it is a sign of support. And while tails above body after a rally would signal resistance. Now just because you see tails under body doesn't mean that it's a buy signal and you should buy. And I'm saying this because this is one of the mistakes that I made while starting out. I would see a bunch of wicks under body after a big drop and I would interpret that as a buy signal. And basically I would be trying to pick the bottom and I would get burned most of the time trying to do it. So to understand what the wicks mean, you need to use the previous price action. And if the overarching trend is bearish, you shouldn't buy when you see these. You're basically just counter trend trading, which is not a good idea in my experience. And that's because this price action right here is legitimate and it needs to be respected. And if you wanted to buy something that made price action like this, then you need to actually confirm the support. Like you don't know if the price just simply hit a bunch of buy orders and is just currently working to fill them, then when the buyers give up, the sellers will just come back and they'll drive price lower. So yeah, buying here would be bottom picking and that's not a good strategy. But if you see tails under body after a small pullback and the overarching trend had this nice bullish price movement, then the tails would actually be a good sign. So to understand what the wicks mean, it's all about looking at the previous context. So that's all the patterns I have for you guys. Now I'm just going to do a small walkthrough of price action analysis so you can kind of learn how you should be going about it when you're trading. So here we have the SPY 5-minute chart from a few days ago, and I'm just going to kind of go over what happened this day. Now this day already happened, but I still think it's a good exercise to go back after the fact and try to understand what happened, because doing this will help you predict the chart while it's moving in real time. And gap downs are actually preferred when you want to take bullish trades because the market has a lot of room to run after the gap is filled. And the gap and go is actually harder to trade because a lot of the move already happened overnight and the market can kind of run out of gas faster, especially near the all-time highs. So at the start of the day, the market instantly begins probing for support. At this point, we want to just watch and see what happens. I don't trade at all during the first 30 minutes of the open, and I usually don't trade within the first hour. I've learned that it's better to just use the open as context so we can take some high probability trades later. Then after the first 15 minutes, we get a large green candle with a large body that single-handedly fills the entire gap. And this candle right here shows that the buyers are certainly active today. Then we get a red doji here where buyers stepped in as the sellers tried to take out part of this candle, but it ended up just being in equilibrium after sellers smacked this move down. And after that, we get another nice green candle with a large body, followed by a few red candles that struggle to take out this green candle. And at this point, it's clear that the buyers have the advantage today. Not only is the SPY D1 bullish, but the M5 is also showing some nice strength. And we can see that it takes the sellers a lot of time and effort to make even a fraction of the progress the buyers have managed to make. Then we get extra confirmation here where sellers move price lower to test VWAP. Then the buyers step in to push price higher, resulting in this green candle with a large wick on the bottom. And this right here would have been a good entry point into a strong stock. We can see that the price action so far is bullish and we just got a rejected VWAP test. Then for the next price action, we get a few tiny green candles followed by a compression. And all of this is happening on abysmal volume. Now this is not what I would have wanted after taking an entry here. I would have rather wanted price to make a new high of day a little more cleanly, on better volume and stronger price action. But you still have to plan for things not panning out just as you expected. So hopefully if you did enter along here, you entered on a strong stock that is able to rise a bit better than this. Then for the next price action, we get a bearish engulfing candle followed by a few tiny candles that are not able to take out the halfway point of this candle right here. And this price action here means that the buyers are currently passive and that another test of VWAP is certainly in the cards. And the fact that we're still above VWAP means that you can stay in your positions and wait to see what happens when price does reach VWAP. And if price does breach VWAP, that means you can exit your positions. But again, all of this is happening on abysmal volume, so hopefully the buyers will step back in after a VWAP test. So here we're now testing VWAP, hoping that buyers will step in and reject this level. Now obviously this entry right here didn't work that well, and if you entered after this candle, you would be in a small drawdown as of now. But still, if I saw this exact setup again, I would still take it, because the D1's bullish, the M5 is bullish, and we can see that the buyers have the advantage here. And for the next price action, we can see that the buyers did step back in and bounce the price off of VWAP on increasing volume. So you would have been fine if you entered here until you saw some sort of VWAP breakdown, but that didn't happen, so everything is fine. And then for the next price action, we see a few tiny candles with a large wick on top. Now remember what I said earlier, just because you see a few candles with a large wick on top doesn't mean that you should panic out of your positions and start selling, because we still have to respect the previous move that happened here to understand what these wicks mean. And it ended up being fine. The buyers were able to work through all of these sell orders and start pushing price higher. And then later in the day, we get ourselves a small shallow dip here. Now this dip is buyable if you have a strong stock in mind, but you have to be careful because there's only a few hours left in the day. So you only have about 2 hours to stay inside a trade before you are forced to exit it, unless you want to take it overnight as a swing. Then for the next price action, we get another shallow dip here that makes a higher low, and you could use this as an entry if you wanted to. But you have to be careful because now there's only about an hour and 20 minutes left in the trading session. Then for the next candles, we get a nice move higher on decent volume, followed by a few tiny red candles. But for the vast majority of times, I don't enter any new trades when it's this late in the day. I found that it's harder to predict price movement in the last hour, and it tends to be kind of a coin flip. And either way, you don't have any flexibility because the session is about to end. So for the last 1 to 2 hours of a trading session, I usually spend this time focusing on swing trades and seeing if there's any entries on a D1 basis. And yeah, that's pretty much it. That is the end of the trading session. We ended up getting a pretty decent bullish trend day here, and the price action wasn't that bad. And hopefully this helps you understand how you should be thinking about price action day to day. And yeah, this is my first video on price action. I'll probably make a few more because I didn't go over all of the patterns in this video. There are a few more. So if you guys want to see some more price action videos, or if you have any questions, make sure to leave that in the comments. And to make sure to subscribe to my channel. I'll see you guys in the next one.